Zacks. I'm your host, Ben Rains. All three major U.S. indexes fell once again as coronavirus fears grow around the world. Wall Street now worries that the fast-spreading virus in China could impact global growth in 2020. At this point, nearly 8,000 people have been infected and at least 170 have died from the virus. Most of these cases are in China, but the virus has already infected more people than SARS did 20 years ago. The Chinese government has already limited travel, which has impacted tens of millions of people in the country. Meanwhile, companies such as Starbucks, which has closed more than half its stores in China, try to decide what's next. Meanwhile, major airlines are also suspending flights to China. Clearly, the situation is ongoing and will continue to hover over the markets until there's some end in sight. Moving on, the Federal Reserve decided not to change its benchmark interest rate Wednesday. The Fed also seemed to reaffirm that it will hold steady and see how the global economic picture impacts the U.S. economy. With this in mind, the Commerce Department announced Thursday that U.S. GDP climbed 2.3% in 2019 and popped 2.1% in the fourth quarter. Fourth quarter GDP expansion matched Q3, but overall 2019's 2.3% growth marked the lowest expansion since 2016. But still, the 2.3% is strong as it comes on top of last year's 2.9%. So looking ahead, economists now expect U.S. GDP will expand by roughly 2% in 2020. Now let's move on to the earnings-heavy part of the show. On Wednesday, Microsoft crushed Wall Street estimates. Once again, the historic tech firm's climb came on the back of its cloud computing unit, which jumped 27%. Meanwhile, Tesla also surpassed top and bottom line estimates. The electric car maker's stock soared over 10% in morning trading Thursday, even as the broader market fell. Investors continue to buy Tesla stock as its output grows. Tesla and CEO Elon Musk expect to increase vehicle sales by more than a third in 2020. Other giants such as Facebook, Coca-Cola, Verizon, and AT&T all recently reported as well, with KO stock up in morning trading Thursday, while Facebook stock sunk over 6% as margins slipped on rising expenses. Looking ahead, Visa, Amgen, and others all report after the closing bell Thursday, plus Caterpillar, ExxonMobil, and Chevron are all set to report Friday morning. But many eyes on Wall Street will be looking to Amazon after the bell Thursday. Amazon stock has moved sideways over the last 6 months, while the S&P 500 climbed 10%. Investors seem worried about Amazon's profit, but the company is spending to transition its Prime shipping from 2 days to 1. Jeff Bezos and the firm see this as a great long-term play to stand out and stay ahead of the likes of Walmart and Target, who've expanded their e-commerce, delivery, and pickup offerings. Amazon's adjusted Q4 earnings are projected to slip 34% based on our Zacks estimates. This would mark a larger downturn than last quarter. Still, Amazon's adjusted 2019 full-year earnings are projected to climb nearly 2%, and its 2020 earnings are expected to surge 20% higher than that. Meanwhile, Amazon's Q4 sales are projected to climb roughly 19%, with fiscal 2019 revenue set to climb 20% this year and another 18.5% in 2020. Therefore, sluggish Amazon stock could be due for a comeback after it reports earnings. And that does it for the news portion of Free Lunch, but stick around for today's new Zacks ranked #1 strong buy stock. Hello and welcome back to Free Lunch. Today we're breaking down why Delta Airlines is a Zacks ranked #1 strong buy stock. Delta topped our Q4 earnings and revenue estimates earlier this month, but clearly we just talked about at the top of the show how airlines have stopped some flights to China. But Delta still looks very strong at the moment, as China is not a big part of its business. So with that said, we're going to dive into some of those numbers, as it said that earlier this week it would cut its Chinese flights from 42 to 21, with those dates going into effect on February 6th through April 3rd, which will impact the firm, but Delta still looks strong, so we're going to dive right into that. So as I mentioned, China is a relatively substantial part of their business, but obviously they fly 5,000 flights or roughly that a day, so going down from 42 to 21 is not going to be crazy for that Chinese flights as they deal with the coronavirus spreading over there and trying to curb that spread. So we're going to now take a look at the company's stock price movement, so we can see that they have been able to top that broader transportation air market, especially over the last year. So if we look over the last year, we'll see that Delta stock is up 14% compared to that broader industry's roughly sideways movement, up just 0.3%. And along with beating its industry in terms of its stock price performance, if we look at its 12-month forward earnings, we can see that it continues to trade under that broader market. So if we look over the last 5 years, Delta has continued to trade at a discount compared to that transportation air market at 7.75 times forward 12-month Zacks earnings estimates. And now we're going to go ahead and take a look at some of their estimates going forward. So we can see that for Q1 2020, we're calling for about 6% top line growth and 7.3% bottom line growth. For the full year, we're calling for about 4.7% growth in fiscal 2020, and then another nearly 5% growth in 2021. A little bit of an overall slip in fiscal 2020 is expected, and then a big jump, 8.23% in 2021. But all of these upward estimate revisions is the big reason why it's a Zacks rank #1 strong buy right now. And we can see, if you go back to 90 days ago, we were calling for 97 cents per share for Q1 2020. Now it's at $1.03. And despite this, what we're calling for is a little bit of a decline from the year ago in fiscal 2020. It was at $6.98 per share 90 days ago, all the way up to $7.28. So maybe that continues to go up and they don't actually report a slight decline this year. And then we have a similar result for 2021, where it was at $7.45 all the way up to $7.87. And then we can see the company has beat our quarterly earnings estimates over the trailing 4 periods. Big beat this last quarter, so blowout earnings last quarter. And then if we go up, well, we'll actually go over here, we note that the company does pay a dividend. It's yielding about 2.84% right now, which is a very solid dividend, easily tops the 10-year U.S. Treasury notes payout at the moment. We can also see that it sits in an industry, this is the transportation airline industry, that's in the top 13% of over 250 Zacks industries, which is always better to be a part of a top-ranked industry instead of a bottom, as they tend to move together in broader groups. And we can see that they have an A grade for value and an A grade for growth and an overall A VGM grade, along with that #1 strong buy ranking. So that does it for today's episode of Free Lunch. Make sure to also check out our new Zacks.com/promo page for a look into some of our services, portfolios, and more. Also, make sure to tune into Paper Traders, which is live at 11 a.m. on Wednesdays. Once again, I'm your host, Ben Rains, and we'll be back next time with more up-to-date market news and a new top stock pick.